Let's talk to Ronnie Chopra. He's the Chief Market Strategist at Knightsbridge Trading Academy. Morning to you, young
Good morning.
Ronnie. Right, 3 thought-provoking slides, a couple of currencies and a commodity. So without further ado, let's kick off with the Great British Pound against the Euro. That strikes me, it's flatlining.
Yeah, if you look at that graph, it seems like it's gone nowhere in the last 6 months or so. But looking further back, 2015, we were above 140. Obviously, everyone's heard about the whole Italian crisis over the last few days. The euro slipped back a little bit. It's around the 114 mark at the moment. I can see further weakness in the euro, especially against the pound. I think the pound is quite undervalued at the moment, especially from a purchasing power parity point of view. So, you know, I can see 120 over the next couple of months and possibly back to even 125. I think a lot does depend on the problems in Europe. I mean, it's not just Italy, it's other countries which are disheartened by the whole European Union. Is there going to be an Italian exit? Whether they say ITIT or whatever. Who knows? But yeah, we are in fairly nervous times at the moment. The whole of Italy, Southern Europe, is in complete disarray. The likes of Greece, Spain, hasn't really gone anywhere in the last few years in terms of their economy. So yeah, it's still fairly negative on the euro, I think. Okay,
well, you seem to always be ahead of the crowd in making these sort of turning points. So basically, you're bullish of the Great British Pound against the euro up to 120, 125. Let's move on to the Great British Pound against US dollar. Now, you called that really well last year. Made these new highs and everyone got on the bandwagon and sort of calling up to 148, 150 year ends, the big boys, and obviously broke onward and upward and then reverse all engines. What are you thinking now?
That's it. Well, I mean, like even, I think a couple of months ago when I came on the show, I mentioned that, you know, it's going to struggle to go above 140. And I think it went to 142, 143. And since then, we're back to the low 130s, 132, 133. We've started to stabilize around this 132, 133 level. And this morning, we're up a little bit, around the 133.50, I think the last time I looked. I'm bullish again on the pound. I think we've had too much of a fall in the last couple of months against the US dollar. There's been a lot of dollar strength, obviously. But again, I don't see us going below 130, and I can see us going back to 140. Positive signs from Brexit. The UK economy is doing fairly well. We had confidence figures out today, which are at the best level for a number of months. And again, from a purchasing power parity point of view, sterling around the current level is undervalued. So yes, a return to 140 over the next few months. I can see that happening, and if Brexit negotiations go well, then possibly even 150. But yeah, let's hope for the best for the Brexit negotiations.
Okay, so you're a buyer of cable, medium term. Let's wrap up with oil. WTI made a high, obviously pulled back a smidge. What are your thoughts?
Yeah, we're down about 4 or 5% from the levels of last week.
Yeah.
If you look at that graph, it looks. I mean, it's had a tremendous run. I mean, going back, I wrote an article in 2016, January, which basically the price of oil was then $27 a barrel. You know, we've gone to 70 odd, and so that kind of recovery has been unbelievable. Partly because of the Saudi Arabians' concern about the Aramco float, and a little help from President Trump. Who's kind of now become like best friends with the Saudi Arabians. I don't know how long that relationship is going to go on for, but it's been very beneficial for the Saudi Arabians. And over the last few days, the price has fallen on the back of the Russians saying they're going to start pumping more oil, and also the Saudis want to pump a bit more. But having said that, the Saudis need oil to be in the mid-80s for them to balance their books, their budget deficit. They have obviously a very high unemployment rate, very generous terms from the Saudi Arabian government for all their people so that they can enjoy shopping in Harrods, irrespective of working or not. And So I think maybe there is a little bit of a temporary blip at the moment, but I can still see us going back to the 80s, just because of the Saudis' need for them to balance their books. Having said that, on fundamentals, no way should oil be at the current level.
Yeah.
You know, we have the future of electric cars. We have shale gas, shale pumping in the States. So anything above $50, the Americans are able to use shale. And at the moment, I think there's a very big risk premium also because of the Iranian crisis. But obviously, you know, with the geopolitical concerns, etc., oil could even go much higher. You know, there's talk of $100. I think that's a little far-fetched, but certainly back to the 80s. But on fundamentals, I think we're struggling above 50, 55.
Right.
So
it's
quite a range.
So you're still a buyer for choice?
A buyer on weakness because of the whole situation in the Middle East.
Yep.
So yeah, I still think that if there's a bit of weakness, then it's probably something to pick up. Also, from a currency point of view, if the pound starts to pick up to 140, 150, I think that also could have an impact on the price of oil in terms of it going up further.
On that note, Ronnie, thank you very much indeed.
Thank you.